All right, what's going on, everyone? Welcome back to the channel. If you're new here and this is your first time, then welcome in. I'm Gerardo. In this video, we're going to be talking about HEX and its Stairway to Heaven. I've seen this term thrown around on Twitter and even my YouTube comments, and I really liked the term because just look at this chart, right? So we're going to talk about a few things, and it's going to be a general type market overview to point out some things that I see in the charts. So without further ado, let's go ahead and get into it, right? So here we are sitting pretty at number 3 cryptocurrency by market cap as measured by nomics.com. Allegedly the most transparent crypto data ranking site out there right now. So shout out to Nomics. Now, we all know and love that. Awesome. I like this chart on CoinTrader Pro, actually. This is our CoinTrader Pro interface, similar to TradingView. You can do a 3-day chart here without the paid TradingView option, which I like, right? I think multiple time frames give you kind of a different viewpoint. The channel that's drawn here is a 20 period moving average channel. So on a 3-day scale, like we're looking at here, each candle represents 3 days. So when you have something like a 20 period of moving average, it's 20 times the 3 days. So you have actually like a 60 day or 2-month moving average, right? And that's just this curve. Now the moving average channel gives you a kind of buffer around this to give you general regions of support and resistance, which in the past, every time we've gone beneath this channel, it's been great buying opportunities, right? These have been some of the best buying opportunities for HEX in all of its history. Even this last little region right here where it wicked down, even when it went into it here recently, and notice how we didn't touch it all the way from about 1.3 pennies until we actually rallied to almost 20 pennies and came back down to recently we tested it, right, with just a little wick. So I like what I see here because this channel has been holding support more or less. Like, look at the bounce off of it right here, right? So you could argue all year long we've been holding this channel more or less as support with about one fake out here, which was the best buying opportunity of the last 6 months or so. So that's why I think this channel has a little bit of significance, right? At least a little bit, if any. And so I like to look at it and show you guys that we just whipped down to it and have a very nice candle that printed after it. Now, another thing I want to point out, if you haven't recognized what kind of candle this is here, think about it for a second. Just look at it. I'll get rid of the moving average channel. Just take a quick guess. And if you weren't able to deduce it by now, this, my friends, is what's known as a bullish engulfing candle. It's generally one of the most bullish candles you can see. How do you identify it? And I'm talking about this one here on August 2nd. It's a 3-day candle, right? So make sure you're on a 3-day candle chart if you want to do this for yourself at home. So the way you identify a bullish engulfing candle is the span of that candle completely engulfs, right, the span of the previous candle. To make that a little more simple, look at the range of the previous candle, right? Let's use our magnet tool to make sure we can snap onto it, right? And what I'm really trying to get at here is that the low of this range was 11.01 cents, whereas the low of this range was 10.98 cents. So it was a lower low in the range and a higher high in the range, as you can clearly tell, right? So basically you have a candle, I think for you guys it's this way. So you have a candle that looks like this, and then a bullish engulfing candle would be one that completely engulfs the span of the previous one. So it would look something like that. And again, that can move. And it would be a green candle, right? Because if it's red, then it's the opposite. It's bearish engulfing. But here we have a beautiful, already printed on the 3-day, mind you, bullish engulfing candle. Love to see it. On the weekly, we also have a bullish engulfing candle, albeit that one's going to close on Sunday at the UTC turnover, right? So whatever that is in your time zone. So I like what I see. I like the fact that on the 3-day, our bullish engulfing candle already closed. I like the fact that on the weekly, we also have a bullish engulfing candle, and we are pretty much halfway done with the week, probably a little more, and things are looking good in the sense that I think it's more likely at this point to close bullish than not, just in terms of how much of the week it's been like that. Yeah, so I think the closer we get to Sunday and hold above the key level here, truly it would be holding above this high of 13.98 cents on the weekly bullish engulfing. If you look at it on a different chart, like on Uniswap V2, then let's try to get the span for you guys there to make sure it's the same thing. The high over here is about 14.36 cents, right? So it's a little different. You'll get a discrepancy, but more or less on, depending on what chart you're looking at, we need to hold the 14.3 cent region by Sunday at 0 UTC, right? When that turns over to the next day, for us to have fully printed a weekly bullish engulfing candle. The 3-day already printing though, I repeat that, I like to see that. So what else did I want to point out in this video? Yeah, I remember it. Let's go back to this chart real quick and just want to point out what we've seen recently from a very, very simple analysis point of view. Okay, I want to show you guys this, and this is super simple, but I feel like it is nonetheless. Here, let's do it without the moving averages. I feel like it's nonetheless insightful. The fact that we tend to have these consolidation regions before a continued move up, retest, and then a consolidation region. And it seems like we did this again recently. A move up, kind of retesting these previous highs, a nice consolidation region, and just stair-stepping our way. So that's why I call this video that, because this really looks like it's just stair-stepping its way, stairway to heaven, you could call it that, right? Nice consolidation period. This is so ugly, right? But you see what I'm saying? An impulsive move up, consolidation, and then kind of like a pump and back down to retest the previous top. And again, consolidation, pump back up, retesting this previous top. And so if we saw a similar pattern, we would just continue on and maybe consolidate around a previous top. And well, trend is your friend, right? I know that was a very sloppy analysis, but it's just kind of like, you can do these very simple, just eyeball it, just kind of by the naked eye type of analysis. Sometimes simple is best. So I want to give you guys kind of a little bit of everything here. I think I also wanted to point out, I have so many charts open here. I think it was on this chart. Yeah, this is what I wanted to point out. The fact that these are the 20-day moving average, simple moving average, and the 21-day exponential moving average. And since the exponential moving average gives more weight to recent data, it's going to react quicker. And whenever you see the purple curve above the blue curve, generally we're running, right? We're rallying, and you can see that on certain occasions. Like, let's just start at the beginning of the year so I don't bore you guys with like countless days of data, right? So where's January 1st? Over here, right? So we had rallied and the purple curve was above the blue curve. Once our rally was kind of over for a little bit and we cross, right? We had this cross right here. Then we had our consolidation region. And then again, we seem to have little rallies and our purple curve is generally above the blue curve. Right? And then we have a consolidation region when we have our crosses. So during rallies, you can see that purple is generally above blue. And a crossover in either direction is generally a bearish or bullish sign depending on which direction it crosses. And it's also, you can't take this to the bank, right? Because sometimes, since these are lagging indicators, meaning they take into account what's already happened, they only really tell you what you almost already know, but because the time frames can be different, it gives you scenarios sometimes where, for example, this bearish quote-unquote cross where the purple went beneath the blue was pretty dang near the bottom. So you don't want to really use this, in my opinion. Obviously, never financial advice on this channel. This is just entertainment purposes. But I did want to point this out that you want to be careful, because at this point we had our cross, and that was literally, the next day or two, it was the bottom, quote unquote, the local bottom. And so compare that to something like this, which is a little different, where we had our cross. This was a signal like, oh, okay, we're going to go down a little lower, right? What was it, like a 30% drop from there or something? So whereas this one, it was like, well, that was more or less the bottom, with the exception of that wick. So it's not something that's deterministic, right? None of this is. Charts are very, very volatile, random, depend on just so many variables that it's impossible to actually predict. but you can get used to certain asset and see how it trades, and sometimes it behaves in patterns. But without too much ranting on that end, I did want to point out the curvature of these moving averages. The fact that we had our bearish cross right here where purple went beneath blue, and then we had our kind of local bottom a few days later. Very nice kind of consolidation, rounded bottom looking thing before this impulsive move up. And now we're actually above both moving averages. I like to see that. I like to see that we're above both moving averages, and the purple curve looks like it's curving in a way that it wants to cross the blue quite soon, right? And we've seen this kind of formation before, right? Like, I think it's like that for you guys at home. But something like this region over here, we can actually see it better, believe it or not, if we get rid of price completely. So it looks like something like this, right? Where if this were just any chart, I would say, well, the logical thing to happen next would be where this blue curve crosses down, purple curve crosses up, and again, the purple reacts to recent data more, so this would mean that we might see a rally where purple remains above blue, like something like this, right? And if we introduce price back again, then obviously the steepness of this and the length of time, it's completely unpredictable, but I do think that this cross is generally a good sign, right? And if we find support on the cross, like over here, that's generally like, all right, load up, you have a couple days before a blast off. Similar to over here, once we actually had our bullish cross, it was blast off. And you see it again over here, we had our cross, it was blast off, and you continue to see it in the charts. Even here, right? Blast off. And dang, I didn't realize how actually amazingly accurate this little indicator is. There you go. Boom, blast off. It's so dang obvious. Like, see, this one was a little tricky, right? Because you had this was way back August 2020. I'm going back like a year. But over the last year, it's been pretty much the same, right? This was our sort of fake out. And then this was our real one, right? Where it was pretty much blast off after that. A little bit of a downturn, and then it was blast off. So, yeah, I mean, but for the past year, right, we had to go all the way back to August of 2020 to find a case where it was a fake out. But for literally the last year, it's been that once we do see a cross of our purple curve, our 21 EMA over our blue curve, our 20 SMA on the daily, that it's generally a very bullish sign. So I would be not expecting, but I wouldn't be surprised to see the price continue consolidation over here, find support once these moving averages cross, and then from there just blast off. And you saw yesterday that our technical targets range anywhere from, what was it, like 25 to 55 cents based simply off of the bull flag that looks like it could be playing out here. If we continue forming something like, HEX loves descending triangles, so if we did something like this, I also wouldn't be surprised either, where we have sort of a flat top, but we keep forming these sort of higher lows before the sell wall gets so weak and to the point where it just blasts off, right? Because you kind of exhaust the liquidity of the sellers at this point, so it becomes a really thin sell wall over time, and then it's easier to break. And then yeah, the rest is history, but obviously I have no clue what's going to happen. It could be an ascending triangle like we've seen in the past. It could just be that we blast off due to this bull flag that we've been looking at for quite some time now. I already have it drawn out on another chart, but I just want to quickly show you, right? Our bull flag, our target. Let me get rid of these moving averages and show you, just remind you that if you take it from this impulsive move, that our target is 25 cents. If you double the technical target, which historically has happened many times, then you're looking at 50 cents. If you take the if you take the move from somewhere like here, as opposed to the actual impulsive move that started over here, then you actually have a higher target of 27 cents. And again, double that, you get to about 55 cents. And that's where we get our lower bound of 25 and our upper bound of 55, which I covered in yesterday's video, or 2 videos ago. So definitely check that out. It seems to be a popular one. You guys like that one? And I think it's because the 56 cent level specifically is this here. It's our 10,000X, right? I covered this in a previous video as well, our maximum ROI, which is basically all-time high divided by all-time low at any given point in time, and how this changes. So you can see that there have been times where we don't have an all-time high for, you know, almost 100 days, and then new paradigm, and then no new all-time high for another long time right here, like almost half a year, and then new paradigm, and so on. It seems to be that time between all-time highs is decreasing, as you can tell here. Now it's only taking anywhere from like 20 to 30 days before all-time highs, ever since like 130 days ago. So for the past like 4 months or so, we've only had to wait, 3 weeks or so before running up to new all-time highs. So yeah, I mean, this 10,000x level, it's close, very close. It would imply a 56-cent hex, and that's just right out of our technical ranges, our targets, right? I mean, you could argue that we don't always 2x our technical target, because there was a time back here where it was a little over at 2x, like a 2.1x or something. So you could argue like 25 cents to 56 cents could be your targets, right? Because it takes into account the actual design, right? A little fundamental point you can throw in your case. So that's that. I think we're gonna close this video. We're gonna wrap it up. Covered everything we wanted to cover. Everything from our 3-day chart, our moving average channel, which looks bullish to me, our bullish engulfing candles on the 3-day and the weekly. The fact that we don't have to wait that long until all-time highs recently. That's what the charts have shown. Not saying this is indicative of future performance, but this is what the charts are showing. And other than that, our technical targets are very bullish, between 25 and 55 cents. So this is the Stairway to Heaven for HEX. I hope you enjoyed the video. Leave a thumbs up if you did. Comment down below what you think. Yeah, you guys have been blowing up my analytics, so thank you for that. We're super close to 5K, on track to hit it way before the end of the month. So you guys are absolutely crushing that. You guys are nuts. Thank you. Same with Twitter. Go ahead and follow twitter.com/Gerardog. I'll leave a link to that in the description as well. Check out the LookIntoHex.com charts. I keep saying I'm going to add some shortly, but since I make videos every day, it seems like I just keep saying that. So I'm probably going to stop saying that until I'm actually done with them, right? Other than that, yeah, thank you guys so much for watching. I appreciate it. Subscribe if you're new. Welcome in. And I'll catch you in tomorrow's video. Peace, guys.